Good evening, everyone. My name is Chuma, and it's my pleasure to welcome you to the Industrial Tech Talk on Climate Tech, organized by Speedinvest. Speedinvest is a leading pre-seed and seed venture capital firm with about 450 million euros assets under management. And our teams are based in Berlin, London, Munich, Paris, Vienna, and San Francisco. Our dedicated sector-focused teams fund Europe's most innovative tech startups, and our in-house operational experts are always available to offer founders ongoing support with growth, HR, US market expansion, and more. Our focused investment teams support founders from day one with their deep sector experience, know-how, and networks. So among these investment teams, we have the Industrial Tech team, which is organizing the Industrial Tech Talks. The Industrial Tech Talks are a series of events for founders during which we discuss extensively and share best practices on issues related to the industrial tech space. So this year, we began to focus a lot more on climate tech. And so today we are hosting our first of several industrial tech talks on climate tech. So the goal of the evening is to really deep dive into what investors expect from startups in the climate tech space, and also to share some best practices with you. So to give you a good idea of how the event will go, first we'll have a short introduction of the topic and the speakers as well, and then we will dive deeper into the actual discussion. We have a short time for Q&A, and then we also break out into Ask Me Anything sessions with each of the panelists, so you can have like a one-on-one chat with the panelists as well. So before we move on to the panel discussion, just a few things you should know. So this is a webinar format, so your audio is disabled until we move into the AMA sessions, but we do encourage you to put your question on the Q&A window, or if you're pretty specific, you can also wait until the breakout sessions to ask your questions. So at the moment, I'm going to hand over to my colleague, Andy. Andy has been very instrumental in our climate tech efforts, and he will be moderating the panel today. So over to you, Andy.
Yeah, thanks a lot. It's a pleasure to have you here tonight, and actually we'll keep it short and maybe do a quick intro on the topic before I move on to all of our panelists. We all know that this decade is mission critical to the future of our planet. And I think everyone has ambitious goals that we need in order to stop climate change. And we also believe that VC can play a really important role in this. PwC referred to climate tech even as the next frontier in venture capital. And actually, we at Speedinvest really believe in this and invested in great companies over the last year in that space, like Silvera, Twice, Planetly, Resourcify, 1.5, and others. And I think that's also one of the main reasons why we're hosting this event today, and it will be the first of many, and really try to also continuously put on content about this topic, because I think it's super important. But enough self-promotion about Speedinvest, and I will hand over to each of our panelists to say a few words about them or one thesis, what they have about the climate tech space. Maybe Martin, start with you.
Oh, hi, my name is Martin. I'm the founder of a company called 1.5 here in Hamburg. I've been previously the CFO of a company called Infarm, which some of you might know in the vertical farming space out of Berlin. I left the company in last year and founded 1.5 to focus on better packaging solutions for the consumer space, hopefully bringing our plastic pandemic closer to a halt. And one thing that I believe is driving our future climate tech sort of development is that what we understand currently as the pretty much booming creator economy, which we're witnessing in the world of Instagram and TikTok is going to make its way also into science-driven climate tech. So essentially some sort of a gig economy for super talents such as PhDs and scientists that will be working on climate-related solutions together, possibly even accelerating their talent by bringing together various disciplines, and therefore, yeah, bringing us again closer to the 1.5 degrees of the Paris Agreement, which is essentially the goal that we're carrying in our name.
Yeah, maybe Anne, you want to continue?
Sure, that sounds great. Based on that intro, I already know Martin and I have to hang out. Andreas, thank you so much for hosting this panel. We love working with Speedinvest. So we love that you're focusing on climate tech too. I'm Anne Bordetsky. I'm a partner at NEA. And NEA, of course, is a West Coast-based venture firm out here in Silicon Valley. I'm actually sitting in Carmel, California today. You know, there's no wildfires yet, so we're feeling really optimistic about climate change solutions today. Give us a couple months, it might be worse. But just by way of introduction, so I actually started my career in environmental advocacy, clean tech, and so probably spent the first 8 years of my career pre kind of joining mainstream tech, really working on energy and climate policy at the federal level in the US, so decarbonizing transportation. I then also helped build one of the kind of original vehicle electrification startups. It was called Better Place at the time during the Clean Tech 1.0 wave. And so, you know, definitely always reflecting on that time to figure out what is different this time for climate tech versus clean tech about 10 years ago. But I've really been building venture-backed companies for the last 12 years at Uber, Twitter, and other startups. And now I'm investing at NEA with a focus on climate tech. It's really, really exciting that we're doing these kinds of panels again, because it really feels like there's an incredible surge of talent that is coming into climate tech right now. And that's very exciting. And in terms of a thesis on the space, I have to say I'm going to echo Martin's kind of teaser here in that I think what is ultimately going to drive us for the next decade is actually consumers, not policymakers. I think we've given policymakers a chance. They've done some stuff, failed us in other arenas, but I really think the generational shift that we're seeing with Gen Z being climate aware, climate conscious, and actively sort of building that into their choices, their lifestyles, and it really becoming kind of a mainstream part of popular culture. That is the most powerful force and engine that we have right now to drive climate solutions. And I really think that is what's going to really kind of save us over the next decade.
Well, thanks. And I will definitely come back to that. I took notes. Hampus, maybe you want to go ahead?
Yeah, so briefly about us. Hampus, I'm one of the founders and general partners at Pale, which is a pretty new fund where we were started 1st of June last year. It's a $100 million fund. We've done 14 investments, and we only do climate tech. So it's our complete focus. We're a generalist fund in many shapes and forms. If you actually look at us, we have done 10 software deals, 1 hardware, 2 food products, 1 fintech company. They're mixed B2B, B2B2C, B2C, like all the blend, all over Europe and 3 in US. So it's kind of very much blend what we do. So we're the strange mix of being a generalist climate tech fund, if there is such a thing. But yeah, I think that's the brief intro.
And your thesis on the space, or your statement that you want?
I think this statement, I think for us, is that I think that this is one of humanity's more complicated problems because it's a coordination problem. It's a tragedy of the commons problem where nobody would make any short-term benefits from working with this. And I think it has to be cause-driven or has to be done with taxes and whips and things. And I think that for us, it is so obvious in a sense that this is going to be a massive change in the world, how we see things. So I think maybe to make it more, you may make it more like tangible or salient for people. I think that one would look at it if you read the Expanse books or watched the TV series on the planet Mars, a third of the population are working with terraforming, so they're working with essentially climate change. A third of the population is in military trying to stop planet Earth from invading them and destroying them. And then a third of the population is working with hotels and services and kind of food production. So I think that in the future, I believe at like 2050, I think a third of the population will work with climate change. And I think that it's not going to be like, oh, you work in climate change. It's going to be like, well, yeah, I mean, of course you work in climate change in one of the big areas, right? And I think that currently we believe climate change, if you go back 5 years ago, 10 years ago, climate change was energy production. That was like where it landed. And I think it's in every sector. It's just like it's in food, transportation, construction, like just everything, right? Like it's just absurd. There's almost nothing that we're doing that is not like changing the planet. And there are many technologies that we look around that if you look at it with climate first eyes and like with a climate mind, you just can't understand how we're doing it. Like when people are talking about kind of manipulating the ecosystem and terraforming and all these things, we've created the ultimate terraforming machines in shapes of cows. Like we've created a vehicle that essentially efficiently destroys the planet as well as we can. And we are producing lots of them. They were cutting down the only thing that sucks down carbon sufficiently. And we're just fueling our own death. And I think if you take a step back with a Gen Z eye, with a climate first eye, you look at that and you just say, what the heck? We're really trying to kill ourselves. So our thesis is that this ship will turn. And with that ship, I think that we need to put our money, our feet, our votes, our jobs, like we have to put everything in that boat to shift it. So that our thesis is very much, we're all in.
Thanks. And no more cows. That's to add.
Clearly no more cows. Actually, one comment of how we look at investments. One thing we ask ourselves, is this compatible with 2050? Like if we look at a thing, do we think we're going to do this 2050? So if people do like we efficiently do cow grazing, which is of course great for climate, we just say we don't think they're going to be that problem of cow grazing in 2050. You won't have enough cows or pigs. So this shouldn't exist.
Cool. Sabina, pleasure to have you. I'm sorry that we had hiccups with the video, but as Anne said before, there is no Zoom webinar without any hiccups. Hand over to you.
Yes, no, thanks for having me. Super excited to be here. I'm a partner at CREANDUM, which is a seed and A investor based out of Stockholm, Berlin, and soon London. But I actually just made the shift over to the dark VC side. I spent the last half decade building CREANDUM, which is the biggest teleconsultation company out of Europe right now. But on the side, I've also been now co-founding the Impact Accelerator that is run by Norrsken, so one of the biggest philanthropy foundations here. So we hope that the program that we're running there this summer is kind of the new Y Combinator, but of course it's all impact startups. So a lot of exciting things addressing climate. And as I think building on what Hampus said, right? It's not as narrow as kind of the ESG reporting tools or kind of supply chain tracking, right? It's everything. It's how to do concrete that isn't that has a zero carbon footprint, or it's food, or it's micro mobility, right? And that's what makes it so exciting.
Cool, thanks. Yeah, I mean, I will pick up the point that you said on the dark side and maybe start the conversation with the good side, Martin, because there's always this debate that actually VC does not really solve the real problems, right? And it's hardware intense, or if it's like capital intense, then maybe the VCs shy away from that. And does this really solve a lot of big problems that we are facing when it comes to climate change? And you, I think you have the perfect experience for that. Your experience at Infarm and now also at 1.5. So how do you see that? And what is the typical answer you give to VCs if they come up with those concerns? And you could maybe give also to.
Sorry, I got you. Give also what?
No, it works. Sorry. Should I repeat the question?
Yes, the last one, please. Yes.
Okay. I said that actually there's a lot of VCs concerns about capital intense and hardware products and so on. And with your experience at Infarm and also at 1.5, but we read those products in order to solve climate change. How do you see that in your experience, and what's also your typical answer you would give to VCs who come up with those concerns?
really depends on what type of VC you're speaking to. There are traditional VCs that are probably a little bit more slow and hesitant on that topic. But there are new and upcoming impact funds like Pale Blue Dot, for example, who probably have shifted their mindset already to be a lot more risk averse. But I think that the difference here is really what type of mindset these investors have made their first learnings on. Are they software-driven learnings, or are they also sort of hardware and infrastructure heavy or asset heavy driven learnings? Because the principles that any investment in the climate tech space is based on is obviously changing. And I said it before, the difference between working in natural limits with our environment, etc., as opposed to the promise of unlimited potential of software startups is just inherently different. Now, what we've seen previously in InFarm, but also now at 1.5, is that you need to make sure that the investor you're speaking to is actually committed first to the overall cause, because even with 1.5, there is quite an infrastructure requirement in order to get things off the ground. Because in our case, we're essentially focusing on the proof from scale of from proof of concepts towards proof of scales. Here you kind of have to also tap into alternative capital, most likely, not the traditional VC anymore, those that know infrastructure investment, real estate investments, maybe alternative capital that is already wired towards this new goal. But at the same time, you always have to come from a market perspective. You always need to be able to show that there is commercial traction behind what you're planning to build, because I strongly believe that just the CO2 balance is probably not enough, because VCs are commercially driven as much as any company that is raising venture capital. And what we've done, I think, quite well at doing the InFarm times and also now at 1.5 is to always show the commercial opportunity, to basically indicate that there is market traction, that we're developing our climate tech, if that's a catch-all phrase, towards to. Then you're essentially working from two directions, really market-driven backwards and scale up from your technology side upwards, because only then you can actually show that infrastructure investments are, after all, not that scary. But that only works if the startups or the companies can also show that this is not always entirely new tech, but possibly also a solution that allows to be dropped into existing supply chain, existing infrastructure, so that a startup doesn't need to say, like, I need to entirely build a new infrastructure so it works, but my solution just puts existing infrastructure or enables existing infrastructure, and therefore scales up much faster.
Thanks. Maybe Anne, to continue on that, because I think, if you look at NEA, and you obviously can fund also a couple of hundred of millions given the size of the funds, and then you have experience in health and a lot of experience on the technology side, and are very much, I would say, also a Silicon Valley driven firm. How's your view on that? And also if you compare it to, because you mentioned in the beginning, let's say the first clean tech wave, and does maybe the view from NEA on those topics and on those ecosystem change, or has changed over the last years?
Yeah. No, this is, as much fun as it is to like critique the venture industry, and it is, and that's always a fun dinner topic. I always look at it from the perspective of like, what has changed in the market that creates a favorable environment for founders, entrepreneurs who want to build climate tech companies. And in addition to what Martin pointed out, I think one of the like amazing changes that we're seeing in the ecosystem now is just like Pale Blue Dot, there's a lot of emerging funds that are specifically dedicated to climate tech. There's others that are coming that I know of that I'm helping to kind of establish and seed and support. And I think it's really important that entrepreneurs have that like pre-seed and seed stage capital from dedicated focused climate tech funds that understand the technology, can help them figure out the commercialization path and essentially prepare them for the kind of capital that NEA or other established venture firms can provide, which is really kind of early growth and scale up capital, right? Together with other sources of funding. And so the name of the game isn't like, what's the one way to do it? It's how do we build a complete capital stack in the ecosystem so that if you're building a climate tech company, whether it's hardware based or software based, whether it's a marketplace or maybe a SaaS product, there are investors for you in this ecosystem that can take you from, pre-seed stage all the way to public company or exit. And I think one of the really positive trends we're seeing right now is there are new participants and new capital players in the market that are helping to fill those gaps. So I think then when I step back and look at it from sort of the NEA side of the table and, put my investor hat on, when the ecosystem starts to mature, it also becomes a really exciting place to invest, right? Because again, you have the right partners downstream and upstream of you to really help these companies become scaled, sustainable businesses. And I think from the investor side as well, like, come on, like this is a one-way trend in the world. Right. I mean, Mark Andreessen famously said software is eating the world. I think as Hampus pointed out, like climate tech is also eating the world, right? It is a one-way trend. And by the way, that's kind of awesome and unique. Like when in venture, do you really have like these like macro one-way trends that you can invest against, right? Like, and climate is absolutely one of them. I think for investors, venture investors, the challenge is to figure out, what spaces to play in, and frankly, what is that holding period, right? And do you have the appetite for that holding period in terms of, how long it'll take for that company to mature? I think that the reason actually we don't see other venture firms, I mean, NEA has been very active in the space historically and will continue to be, is that, you are somewhat sort of constrained by what you've promised to your LPs. And so if your limited partners have given you capital to invest in climate, great, you can do it all day long. If you've made other promises, you do have to sort of, I think, be respectful of sort of investing within the bounds of what you've promised to your limited partners. But I think we'll see more funds sort of roll up climate into their core kind of investing thesis over time, because it's just a one-way trend that investors won't be able to ignore.
I think there was James Gorman from Morgan Stanley. He said that he was asked if it's really climate change is really a risk to the financial system, and he said, if there's no planet, there won't be a financial system. So I think that maybe because we see that a lot of VCs actually going into the space. I think we already this gonna be next decades shaping our economy. So maybe to make it a bit more concrete, because we normally have lots of founders tuning in, right? So and want to know what are the tips and tricks, or what you guys are looking for. Maybe for Sabina and Hampus, if you look at the climate tech space now, what are like specific areas that get you particularly excited, and or maybe specific companies that over the last time you have seen that you think is super interesting and their approach is actually quite unique, or a space that you think is actually interesting to watch?
You want to go?
Start.
Okay, should I start? Yeah. So I think that I think that, I mean, as I think Anne said as well, I think that we have to look at where specific kind of asset class, right? So like being a climate venture fund, we can focus all day on being climate, but being a seed stage climate venture fund means that we have to think about what the seed stage is. So what we do is like we tend to not look at things that are quote unquote obvious. So if it's something that we can just ask everybody, do you think that people will just measure and optimize the supply chain? What do you think about just clean meat production? What do you think about the actual electrical vehicles? What do you think about clean electrical production? What do you think about carbon and ESG measurement? Most people will just say that's going to happen. And then we tend to not invest in that, because that is really tricky if you're a seed stage fund, because you need to do something because of the timeline of the fund and the stage you're in. It kind of like very clearly, if you think about it in financial terms, if you're investing in something that everybody agrees in, there is very little upside investing that. So like we have to invest in something that most people don't agree to. And I think that one thing also about venture is that venture handles risk really well, usually, but what venture doesn't handle well is ambiguity. So when, for example, you're saying we're a hardware company, we need to like build all these things in all these factories. If we know there's project financing and we know, as Anne said, there's upstream capital, I think we're pretty fine. Like that's a risk we can take if there's an upside. But ambiguity is something that venture, well, humans don't handle really well, right? So things that we are looking at and really are interested in is, for example, how do we create a world where the financial system quicker divests from fossil and goes into like greener things? Right now we have a really crazy problem that your pension money and like most of your savings, your mortgage is placed in something that won't give you a future, which is extremely ironic if you think about the fact that you're saving money. If you're like 30 right now, you're saving money for essentially retiring in 30, 35, 40 years. And if we're going in the direction we're going, you're not going to retire. So it's very ironic that you're putting your money at actually making your retirement low probability. So that's an area we've been talking a lot about. Another area where we are very interested in looking at is thinking about how do we find business models that are about land preservation and biodiversity. Right now we have a very strange like Cobra like effect, like an inverse incentive, which is that you're financed to cut down trees, like look at the timber prices, and you're financed to plant trees. But both cutting down trees and planting trees are actually really bad for climate. And note, even planting trees is really bad for climate. But there's no business model which is about preserving. Like there's very, very few business models which is about preserving. And that's really strange. So that's an area where we've been talking quite a lot and like thought about what models there are. And then I think a third area we're very excited about and thinking about a lot is actually, and this is a bit controversial, but it's in modifying crops. Like we think it's like we're talking about clean meat, everybody's on the boat and say like, yeah, let's go, clean meat is fine. But if anybody says, what about like, clean coffee, or what about, clean beans or whatever, people are like, ooh, whoa, are you talking about GMO? We're like, yeah, but you're fine with a cow. You're fine with a cow in the vat, but you think that, a bean is really strange. So that's an area where we have done one investment, and we're definitely looking at that more and trying to figure out like, how do we grow crops in the future? So those are three things, but I think that this is probably slightly different from Sabina, which is complementary, of course, which because we're early stage, we have to do stuff that are less obvious.
Well, thanks, Sabina.
Yeah, and just, I think, as I said, for us, climate is across almost how we defined all the sectors before, right? It could be a finance, fintech company. It could be a scooter company or something else, right? So for us, it's much more important to find kind of where do we fit into this space, because we are not, we will never be the best experts in climate, but we do think that we have an important role to play, because where climate tech is right now, I think it's booming, but it's also quite immature, and it's a lot of there's a lot of people committing kind of their whole hearts and lives and everything into this, but a lot of entrepreneurs lacking kind of the experience of building companies. So taking this passion that they have and making it commercially viable and scalable. And I'm excited about scale just because that's how you have impact. It's very nice if you make a small climate solution for your city, or you can kind of take a farm to table and make an app out of it. But what's really exciting is when you can take something and make it huge scale, right? So we are trying to find that in the climate space. Where does this company building, leveraging software in the right way, finding network effects in this weird scattered space maybe they're operating in, and then I mean, capitalism is what got us in this trap, right? But we also believe that then it has to be able to take us out of it. And but that's kind of how we're thinking about it, as kind of a big thesis, if I can say that.
Thanks a lot. Yeah, maybe after we heard now from the investor side, maybe closing the loop back to Martin. Is this what our prominent investors here told us, in line with what you see when going fundraising?
I think that people across the board are getting super excited about these new solutions, right? Investors, even hiring talent is now a lot easier for climate-driven solutions, I believe. So I think that we all have had our wake-up call already. Now the question is, how can we actually put this into an executionable sort of blueprint? And the investors that we've been speaking to, and I believe that the way we have actually handled our first funding round for 1.5, obviously they always need to be under some sort of a North Star metric that you lead your specific round with. Now, for us, it was the pre-seed round. It was super early. We didn't have much tech. We had pretty much raised this round on our previous traction and a strong vision, I believe. But when you start raising those rounds, and I think this is really more an advice for all the other entrepreneurs out there planning to raise, I think it makes sense to find those people that believe in your cause. And we have found a lot of followers, a lot of mini tickets even, which actually turned into massive expertise, a massive long-term upside, a lot of network to or introductions to other investors. So we had many smaller tickets that turned out to actually extrapolate into many more investors. And for us, quite unusual, I suppose, we actually found like over 50 sort of high net worth individuals, angels, a few smaller funds, etc. A lot, you might think, but for us, we actually considered all of those many investors, certain believers on one hand, and therefore activists that are aligned with our cause, but also some sort of a third co-founder, if you will, because Claire and I have founded the company, the two of us, but that many investors are all bringing a tremendous level of network and expertise that will allow us to sort of push this forward. And in all of the VC discussions, and that is actually the interesting thing, is those sort of early stage angels and smaller tickets were the traction we needed to show to capture the interest of leading VCs such as Speedinvest, right? Because I mean, I believe you guys wouldn't have been the first converted ticket for us, right? We tried that with Hampus, didn't work, but the moment we had already a tremendous amount of capital committed, suddenly we have shown that we de-risked the entire business. So it was an easy cause, or an easy case actually, for Speedinvest to sort of capture this entire round, right? And the round was essentially 4 times larger than we initially anticipated the raise. So I believe that many smaller tickets can actually make your case fly, especially in the early stages, because it is actually the traction that you need to show. And if you don't have revenues, you need to find some sort of currency, some sort of wealth that you can position. And for us, that was actually this almost activist-like investor pool that was this final for such a round.
So you're saying actually to other entrepreneurs out there that there's a lot of people actually who share that vision and who really want to invest in topics like that, find those ones and maybe come up also with a setup that is maybe a bit more unusual than the traditional VC rounds, and then actually it's a good start also to drive the company forward to attract other investors, etc.
Essentially, yes. I mean, look, there are a lot of scientists out there, and we spoke about making that science talent become mainstream. We need to coordinate it in a certain way, right? And there are even funds, small first-time funds, like that have a single GP, but that have basically managed to build a scientists-led consortium behind them, right? Like Nucleus Capital, for example. Like some of them have already a wealth of know-how that is actually very beneficial. I mean, there is this ability to really aggregate all of that talent. And some of them are actually just a 5K ticket.
Yeah, maybe because Hampus, as an emerging fund manager and actually a new fund focusing on that topic, how do you see that these different kind of players that was mentioned in the discussion today already will reshape this fundraising game for companies in the space?
No, but I 100% agree with what Martin is saying. I think that there are so many people who believe in this. I think that we see when we actually changed our portfolio model when we started the fund, because we originally went out with much more belief that we would have to take the whole round. We would be kind of, what like True Ventures and many others do, which is like, you take 20% of the cap table, like you put in the whole ticket. That's what you have to do because there are not going to be people agreeing with you. And we come from a world of having done a lot of angel investments. Like we've done, I don't know what it's 120 something investments before starting the fund. So we actually love having a lot of individuals in the round, and because we used to be them. So we believe in that force. So I think we actually changed our fund model completely. So we actually take roughly 10%, which is like half of the round often, right? To then fill up with maybe a micro fund, maybe actually even like a family office that is a specialist, a bunch of angels that used to be operators. And we found that again and again, that syndicate is super strong. I mean, it's great. I mean, we've done for example, we've done a co-investment with you guys at Speedinvest. I think it's really changes the game when we're suddenly more people around the table that think similarly. And I think in that company, I think we have like 7 different, maybe 8 different microfunds and angels, which of course bring their flavor to the table. So I think that I really believe that we have different roles to play. And I think the good thing, of course, is that when I was an angel and if you put in like, 40K euro, I wouldn't have the muscles to, as Martin said, I can't create the ketchup effect in closing round. Like you need a fund to say, we'll take the DD, we'll take the responsibility. If there's a bridge, we can solve it, right? And that usually what's create the ketchup. You need the legendary lead investor that says, okay, we're going to look at this. And so there's a huge value of having institutional players still. I don't think that microfunds or angels will solve the problem, just as in crypto. Crypto wasn't solved by the community. Like you need a couple of players that take the bets to get the market off.
And just to add to that example, I led a deal in the first quarter of this year. It's robotics in the sustainability space. Haven't announced it, so can't say what it is. But to further this example, even in that case where I essentially was the lead investor and NEA was the lead investor for that round, I still sat down with the founders and we had that conversation because I very much believe in the strategic angel and operator and kind of expert early on the cap table model. It's incredibly valuable. And so we sat down and mapped out the cap table together. And we said, okay, who else do we need around the table that's going to help you with understanding the market, hiring the right talent, coaching you as founders, giving you unique expertise you do not have on the team or that we cannot bring, as a firm. And so we've treated that as a very collaborative exercise. And then we picked people to really surround the founders with the resources that they need to kind of get the company to the next stage. And I think it's actually very important for institutional investors to do that versus trying to sort of, be the one partner to a founder, because especially in climate tech, everything is so complex that you really need, the unique and correct constellation of talents for each individual company to help it thrive.
But maybe for, let's say, Sabina, let's say for like a Series A investor or like CREANDUM who really likes to lead rounds also in those companies. How did you see that in terms of also there are always these discussions, right? A lot of founders have and ask us as well. Should we really have that many people on the cap table? Is this not also a bit difficult to handle and so on? How do you see that when you, for example, want to lead an investment then in, let's say, in a follow-on round? Sorry, you're on mute.
Sorry, yeah, I think regardless of being climate related or not, if we do seed or even pre-seed, which is becoming, I mean, more and more common, and we always take a look at the founding teams and the industry, and we say, what's missing here, or what could be added to this group, right? We can support them in building great software companies, and they probably coming from different areas of expertise. But every industry is broad, right? So regardless of it being gaming or climate, we always want to bring in the top angels from the industry. And obviously if you come into an A round, that is becoming more difficult, right? Just because of valuation. But I also think that for many angels, I mean, getting involved in companies, it's not only about the ownership of the company, right? I mean, they want some stake in the game, yeah, but they also want to be associated with the best company. So even at that stage, if we see that we can get access to great people in the industry, and that might not be former tech entrepreneurs, right? That might be, as we say, like family offices or something. And I think, I mean, for me, having spent the last 5 years in healthcare, which is now like, oh, it's so obvious and everyone's investing in it, but it wasn't 5 years ago. It was much more like where climate is today, where everyone think it will happen, it will create great companies, but it's very, very early, right? So I mean, also in those kind of spaces, we have a lot of similarities, right? You need to connect with industry experts because it's about science. You can't just say that this is better healthcare, or you can't just say that this is better for the climate. You want it to actually work. So you want to have connection to the scientific community. You want to have connection to family offices because they have connected into local regulators, maybe. So I think there's a lot of kind of similarities there.
Thanks. I quickly want to jump to a different topic because it was also mentioned regulation, and we're running out of time. I could go on for hours, but because it was mentioned,
we're actually running out of time as a species. I just want to highlight that.
Yeah, that's true. So maybe, Anne, because you mentioned, I mean, your background, right, in at federal policy level, and you said you don't think policy will be a game changer. Maybe one thing to start with.
No, that is not what I said. I said consumers will save the day, not policies. That's
true. But how do you see that the role of policymakers, and especially maybe with the new Biden administration, how do you see, because it was also mentioned in the chat, how do you see US versus Europe? How do you see the positioning the US versus Europe at the moment?
Yeah, it is, gosh, it is such a good question. And I don't think I could do it justice to answer it simply, other than to say that I think that from an investor perspective, from sort of an entrepreneurial ecosystem perspective, what's happening now is both a blessing and a curse. It is a blessing in that the administration is obviously shining a light on climate change and will use its full kind of regulatory power, administrative power with, across federal agencies to essentially try to advance the cause, right? So whether that's through the Department of Energy, the Department of Transportation. And so I think that will open doors for many entrepreneurs, or at least will kind of legitimize companies and opportunities, right? With that halo effect. The curse part of it is that since we are talking about, billions of dollars of new infrastructure funding, I mean, this is exactly what killed a lot of companies in the clean tech 1.0 wave. Like a lot of companies were created on the promise of, I'm going to go out there, I'm going to win large, government grants. And investors bet on, those grants materializing for their startups. And then when it didn't materialize, right, like it literally killed companies. And so, you know, the only exception to that, you know, is we hold up Tesla as like this massive success, and it has been, it's a remarkable company, but let's not forget, like, what made Tesla in those early days was a $450 million loan guarantee that Tesla won and other companies did not win, right? In that kind of, you know, funding boom of the Obama administration. So I look at it and I'm like, you know, for me, it does slightly increase my confidence in climate tech investments to know that there's a climate friendly administration. But I think I would be investing in this space regardless because of the macro trends. I am worried that a lot of entrepreneurs will get trapped in this, you know, there's billions of dollars waiting for you from the federal government. Like, it's really more of a trap than an opportunity. And it takes real skill to kind of navigate that in a way that doesn't, you know, ultimately create like a major risk for the company that you're building. So I'm cautiously optimistic, I would say. I do think policymakers have an incredibly important role to play. I mean, like, let's price carbon finally, so all this stuff falls into place. Everything else is just like whittling around the edges. But I think because in the US, it always has been so tough going, and it's still tough going at the global level, I think the cultural change that will come from this generation, you know, growing up with climate change and inheriting it as a problem, will just apply more pressure net that I think some of the promises that are being made on the regulatory front. But that's a controversial view. So guys, feel free to disagree with that. We still need regulators to do their jobs.
Yeah, I think it was interesting to see also, I mean, the European Commission presented the European Green Deal, right? And all the initiatives that were in there. It's actually a very interesting paper, but they didn't really get to work yet, most of those things. Whereas if you look at least it's impression from the outside view out of Europe, since the Biden administration is in place, you could argue that at least you could, as you said, it could be a bad thing as well, but at least they really went to work rapidly. And the question for me would be, and maybe to the Europeans among us, how do you see Europe in that regard, or the European, from a regulatory perspective or from a policy level, and your experiences you had so far, and can Europe be a leader in, let's say, climate tech companies?
I can go first if you.
Yeah.
Before joining InFarm, I have been working for the European Commission essentially, and have been the first institutional investor kind of into InFarm, if you will, right? You cannot fall into this trap. I'm fully with you, Anne. You need to make sure that you leverage grants to your benefit, but it should not be what your entire thesis is based on. Even now with 1.5, we have already gotten incredible amounts of grants, but they are just a nice cherry on top. It's not what our thesis is based on. Now, the thing is that if you look backwards, it took us 10 years to actually do what the EIF did to literally every single fund in Europe, which is backing them with like, what, 50%. I mean, I'm exaggerating maybe a little bit, but like almost every fund in Europe was backed by the EIF with 50%. Now we are starting to do the same thing for promising startups. Of course, back the good ones with 50%. It makes funding so much easier. Now, that is probably just one step into the right direction, because obviously legacy needs to be changed. Taxes for CO2 have to be implemented, etc. But fueling the system with cheap capital is already the first step. Or it doesn't need to be cheap even. It can be priced well, but it needs to be reasonably achievable, right? And getting proper grants is something that scientists have done for years and years, because that's essentially what universities and research institutes are wired towards. They are grant writing machines. That's how they are being funded. Now, this is where all the science, probably most of the solutions to our climate issues are based in. And this is where you probably now need to also really train startups, entrepreneurs, tech spin-offs even to be able to capture this essentially free capital. The money is out there, right? You just need to know how to capture it and how to bake it into a proper story, because the moment you have it, it is something, again, considered as wealth or currency that enables you to raise from sort of growth stage VCs yet again, right? So that's
for the
my
founder. For the founder, it's non-dilutive capital, which is really nice.
Which is amazing.
So get as much government funding as you can. Yeah.
Yeah.
But I think to that note, I think for me, it's like super important that different kinds of capital have kind of different kind of roles to play. But also the other thing is that if you design your company so that the government is your customer and not you're not solving the problem, you're figuring out how to get money from the government, that's gonna, like, the government puts in money as long as the thing is unsustainable economical, because that's the point, right? You subsidy it, and the second it's economically viable, then you start pulling back subsidies, because that's what you're supposed to do, right? I mean, look, I mean, Sabina spent way more time than I have done this with like the telemedicine world, where the government just threw in money to get it to work, but the second it got to work, they just like, okay, let's pull out, right? And to make it needs to be self-sustainable. So I think as a startup, I think you need to navigate and make sure that you're actually solving a problem that somebody's willing to pay for. But then I think that the point about different capital, I mean, governments might not need to do a 3x of their money. Governments are super happy if they get a 2% or 3% or 4% interest. So for them, or if they just create jobs. So like governments are super happy to be the thing. They could do the project financing. They could do like the crazy early grants, which is like you get 50K for just thinking about it for a bit. But like the problem is, I think that I am not a big friend of governments plowing in money in managers that maybe shouldn't run venture capital funds and having them to just write random checks and just go like, yeah, we need to plow more money in. Because I think there are certain companies which I think is, and this might be a harsh thing to say, but I think that I really found as like over my investment years as an angel, there's certain companies that I've worked with, which is like a bit of the headache of fundraising is actually really good. Like it's really good. Like you iterate the idea one more time, you explain it one more time, and then suddenly like, oh yeah, I like it. And then suddenly there's something there. And I think that personally, I have invested in many companies where I actually disagree how it's solved, but the ambiguity, as like kind of brought in before, is so low that I feel like I disagree with the solution, but I'm more willing to take the bet. So I think that sometimes if we plow in too much like capital, like if you can get like $1 million from EIF without having an idea, then those founders would actually, instead of iterating for another 3 weeks, 6 weeks, a month, they would find it. But I 100% agree with what Martin said, you need enormous amount of project financing.
So basically, as a tip for our entrepreneurs who are listening in, that don't get trapped by grants to not finding, let's say, product market fit or what really your value add to potential clients is. Just because you actually get grants for free does not mean that you have actually a product that in the end somebody will be willing to pay for it, if I understood that correctly.
But I would say, don't skip the grant. Like if you get like €1 million and then like an extended runway, go take it. I mean, for God's sake, otherwise you're crazy.
Okay. Yeah, interesting point. And Sabina, what's your view? I mean, CREANDUM as one of the leading funds in Europe do you think, and we also did, so CREANDUM and Speedinvest did this report together on the climate tech startups in Europe. Do you think that Europe can be a leader, or maybe we get outpaced again by, I don't know, US companies?
Sorry, muted again. I think we can definitely be the leader in climate. I think, I mean, as we touched upon, regulations are not unimportant and government support is not unimportant, but we shouldn't do the mistake of thinking that politicians will innovate for us, right? They will never be on the forefront of any solutions. That's the entrepreneur's role. So we can't sit around and waiting for their thumbs up or thumbs down for anything. We need to lead the way. Or I mean, the tech industry or the climate entrepreneurs out there. I mean, we need to show them what the future looks like. We can't ask them what the solutions are, right? But I think we do have so much momentum and kind of seeds now starting to grow in Europe. So hopefully this is an area where we can take now all the amazing things that is happening early stage and make sure that we fuel in a lot of kind of company building talent and knowledge to make it, I mean, scale ups, not only startups.
Mm-hmm. Yeah, thanks. So thanks everyone for taking the time. Actually, we'll conclude, unfortunately, because there's so many other things I would like to discuss. With one question I asked the team, because we recently invested in companies in the waste space, right? So I asked the team what could be an interesting question to conclude the session. And the question is, to each one of you, so do you actually at your personal household, do you separate your waste?
We live in Sweden, so it's like it's impossible not to. Like, I think, I don't know if you've seen the MTV Cribs when they're looking at Robin's apartment. Yeah, we've done that for 10 years, and you're a crazy person if you don't.
Can you change the question? Can you change the question to like, do you, because hopefully the answer is yes, but do you do it accurately? And do you know that you're doing it right? That would be
Then we don't. Plastic recycling in the same bin in Sweden.
Okay.
Yeah, I mean, we obviously separate our waste, but to your point, because I've looked at the space a little bit, Andreas, I mean, I think the interesting thing is like we as consumers, and I think the companies that make the products that we ultimately throw away don't have any visibility into our waste stream and how we're really doing.
Yes.
So, you know, out of sight, out of mind.
That basically closes the loop to your statement in the beginning that the consumer will be at the forefront in changing this, right? And also in terms of educating the consumer on this. Yeah, so thanks everyone for participating. It was a real pleasure. We will have the separate hangout rooms, so basically for half an hour Q&A with our panelists, and that you can find actually in the chat and on the Eventbrite link. And this session is also recorded. So yes, there were questions if this is recorded. Yes, it is. I hope we answered all questions. It was a bit difficult because there are so many, and I hope that we're gonna have most of you back in our next session on climate tech. Thanks to all of you for participating.
Thank you.
Thanks.
Bye-bye.